Good afternoon. Thank you for joining us at the first event of Conservative Home's programme for the Conservative Spring Conference. I'm Henry Hill, the news editor at Conservative Home, and here joining me today on a panel held in partnership with the Taxpayers Alliance is a panel who are going to discuss business rates. Now, as we know, the UK has had, the world has had economically a pretty miserable year. One of the biggest live questions at the moment in British politics is how are we going to help the economy bounce back and unlock the growth that will hopefully help to undo some of the damage. And one of the biggest questions on that front is taxation. The government has announced a review of business rates, which are widely seen by members of the business community as a major stumbling block to growth. They don't scale the rents, they don't take account of businesses' economic circumstances, and there are various other problems as well. So what can be done? What reviews need to be made? Let's find out. I'll introduce each of the panelists as we go. They'll each speak for about 5 minutes, and then the floor will be open to you, the audience, so send in your questions, and we'll do the Q&A at the end. So without further ado, I'd like to introduce our first speaker, Paul Scully, MP, the Minister for Small Business.
Thanks, Henry, and thanks Conservative Home and Taxpayers Alliance for hosting this. It's a really important subject, and it's one of the really key parts of understanding what we can do in terms of determining the future of the high street. I remember I'm sitting in Sutton in my constituency office in Sutton, and I think it was back in 2006, 2007 that I was sitting here as a councillor talking about the future of the high street. What does the high street look like in 10, 15 years time? 15 years on, we're still having that conversation, but because of COVID, that's accelerated that conversation, and it's what does the high street look like in a year's time, 18 months time? And that's not only just bouncing back from the pandemic, but it's understanding what the baked-in behaviour changes are for people, whether it's a greater use of online, whether it's less use of cash, and of course in our towns and city centres, that issue about people returning back to their places of work and flexible working, which obviously affects a lot of businesses, especially the smaller independent businesses in the middle of town. And I'm really pleased that we were able to extend the business rates holiday that a number of retailers and small businesses, leisure and hospitality businesses have been able to enjoy. I'm someone of a free market conservative. I believe in smaller government, but clearly we had to intervene in the economy given the unprecedented scale and nature of the pandemic. But with £407 billion in total of economic support both now and into the future, that gives me 407 billion reasons why we need to, as we gradually step back and let businesses come to the fore again in reopening, recovering, building resilience within their businesses, we need to make sure that we're helping shape that change rather than simply just taking our hands off the wheel and letting things go, because we've managed to protect a lot of jobs and livelihoods and businesses. We need to make sure that we continue that protection until they can stand on their own 2 feet and not just survive, but thrive. But then that's when the fundamental review, the fundamental changes need to really kick in to go back to that conversation about how we shape our high streets and what they're going to look like in a few years' time. That's why I'm really pleased the government started the fundamental review, business rates review, and we started consultation last autumn. We've issued the interim report last week, but the main substance of that report will come in autumn to take stock really of where we are, as I say, following the COVID pandemic as we start to come out. And the kind of reflections that I would have on that, and very much personal, I'm fortunate that I cover many different portfolios, but high street being one, but directly working on that business rates, that sits with Treasury. But I'll certainly be having my say, because I just sit there and look at what I would like to see and kind of areas I think we need to look at as a government. Business rates is a good predictable tax for the Treasury. So whenever they come up with any sense of change, they clearly need to be able to replace it, have to look to what they're going to replace it with. The business rates relief itself is £27 billion of that 407. So it's quite a substantial amount. And so that, again, we need to work out what we're going to do. So it's a very expensive tax to try and change. But being expensive, that means That's why we have to change it if we're going to be ready for fit for the 21st century, for businesses changing the way that they are, blending, not just looking at online versus bricks and mortar, but it's the businesses that do both. It's as more and more businesses cover both sets of ground there. And I think Henry said it at the beginning, businesses are measured, the success is measured in very different ways. It's not just based on square footage. You can sit there in a small business with 5-10 people, with maybe a small distribution center or something like that, or even outsourcing your distribution center, and turn over millions and millions of pounds. So how do we look at a fair taxation for them compared to something that just has a dominant position, not just on our high street, but then by its very nature on our social fabric and community. So it's just as important, but may turn over a similar amount. I think we need a better connection to the sense of place as well. When we were handing out the grant money, out of all of the different schemes that we've had in business support, the furlough scheme, the self-employment scheme, the grants, the original grant scheme, they're all reverse engineered on existing structures. So furlough was based on a payroll, self-employed scheme was based on tax returns. The grant scheme was based on business rates. And you'd think that's actually comparatively easy to hand out because you know who's paying business rates. The problem is we didn't have, the local authorities didn't have as tight a relationship as they might want to with businesses to know who and how to pay out the money because they're just used to receiving money. And so working out a way that actually we can tie in a better relationship through businesses and the local authorities or local drivers of shaping that local economy, I think would be really useful. And a lot of people talk about whether we should have an online sales tax. I talked about the fact that we should that we need to look at how we work on online versus bricks and mortar and that blended mix as well. But I don't want to look down the route of a digital sales tax and an online sales tax just to put a sticking plaster on rather than tackling the fundamental issue of the future of the high street. Because if you just play whack-a-mole with the tax system, you end up with the tax code as long as it is and complicated as it is. And I'm someone that firmly believes in a flatter, simpler tax system that makes it more attractive for people to invest, whether it's on the high street, whether it's digital or however. I'm thinking just finally in terms of where we need to go beyond looking at the business rates, clearly the challenge for the high street is further than that. It's what kind of mix of retail, hospitality, are high streets going to be destination places? Are we going to have local cluster working rather than a big HQ in the centre of a town or city? Are things going to pivot a little bit more? We talk about flexible working to maybe having teams working in shared workspaces on the outskirts of a town and maybe travelling into their HQ 1 or 2 days a week. These are all things I think that are in flux at the moment, but we really need to learn that baked-in behaviour change and roll with it, shape it, as I say, but allow the market to help drive that, being partnership with the free market rather than some sort of command top-down approach. And what more can we do to work on rent as well, so that retailers come to me week in, week out and talking about the upward only rent reviews, about the rent and rates are the two biggest fixed costs for businesses. So these are complex issues. The Landlord and Tenant Act has never achieved the right balance in 40 odd years. So it's an ongoing debate that we're going to have, an ongoing debate that I'm really keen and very, very much engaged in over the next year or so. Thank you, Henry.
Lovely, thank you very much. Right, next up we have James Lohman, who is the Chief Executive of the Association of Convenience Stores. Over to you, James.
Thanks very much indeed, Henry, and thanks to Conservative Home and the Taxpayers Alliance for setting up a really timely and hopefully interesting debate. And Paul certainly started off by framing what should be an interesting debate. My organisation, the Association of Convenience Stores, we represent the 47,000, nearly 47,000 convenience stores in the United Kingdom. We employ 412,000 people. So it's a significant part of the retail industry. And it's probably been the retail industry that's been leading or certainly an active participant in calls for fundamental changes to the business rate system. We've been very much part of that. I think it's a long overdue look at this. As I say, a shame we're now waiting to the autumn to find out more. I think that's probably what we're expecting in all truth, but we'll see what comes through in the autumn. And we really do need to see a commitment to tackling the fundamental issues in the business rate system. I should just say, before going any further, a thank you to Paul and his ministerial colleagues for using the business rate system over the past year to the benefit of retailers, including our members, through the business rates holiday and through the grant system, which you referred to, which has provided absolute lifeline to many of our members, particularly those who are operating in major centres, transport hubs, petrol forecourts, those sorts of locations where they're more dependent on people moving around and picking up on that footfall. And for those businesses, it's not an exaggeration to say that some of them that would have been a difference between survival and be able to continue and not. Other members in neighbourhood locations had a slightly different experience during COVID. But I think one thing that unites everyone during COVID is that we've probably reached a consensus just how much high streets matter. Now, whether that's because of the experiences we've had of interacting with high streets, the benefit of local, the benefit of accessing essential goods and services through the high street, but just as much through the experience of not being able to access those things, hospitality, non-essential retail. And I think we've realised just how much we missed then, not just in terms of a transactional, functional day-to-day, we fancy going to the pub or going shopping, but in terms of how much you've understood how those things really matter to our quality of life, our mental health, our interaction with others, and our social lives. And it's interesting, therefore, to think about it in those terms. And really, business rates have become almost a tax on social interaction, almost a tax on creating social benefit, a tax on investing in those sorts of locations. And that can't be right at any time. I think coming out of the pandemic, that should be foremost in our minds. And the changes that we've seen on the high street before COVID-19, but certainly exacerbated during it, we can see without doubt that those changes on the high street are structural. They are not just cyclical change. And I remember for many years talking to officials at the Treasury and elsewhere and politicians across the political spectrum who would say, well, yeah, those businesses may have shut down, but another business will pop up in its place, won't it? Someone else will take on that high street unit. And we now know for sure that that's just not where we are. The world has changed, the way people shop has changed, the way people socialise has changed. And yes, we'll have another realignment after the pandemic, but fundamentally, those high street units are not going to be filled to anywhere near the degree that they need to retain vibrant places close to where we live. So looking forward about the changes to the business rate system we all hope to see, we'll probably have a chance to get into more detail, and there are reams of discussion on this from various government consultations, but just 4 principles to maybe frame the way we think about this. First one is about investment. The recovery from the pandemic is going to be driven by private sector investment. And I think this is really clear and really encouraging to hear the Chancellor talk about this and to set policy in the light of that fundamental assumption in his last budget. That super deduction is a classic policy to try to promote private sector investment, and we fully support that principle. At the moment, the business rate system is an impediment to investment. It's a disincentive to invest. If one of our members improves their store by putting in pallet racking in the back office, if they put in CCTV, if they bring in new features into the store to improve the experience for customers, they are taxed on that investment through the business rate system. That is crazy. They should be supported to make those investments and receive discounts, not the other way around. And I'm looking at that investment from a business point of view. That applies equally to people making plans to plan for more vibrant places, councils working in partnership with the private sector to develop places. They need that incentive to invest as well. Second big principle is about place. Do we take a view about what sort of places we want to try to promote and support into the future? And I think we should. I think it matters what high streets look like. It matters what secondary parades and neighbourhoods look like. And it matters for people more widely, I think. So there must be an objective in your business rate system to promote good places. The third big principle for me is fairness. And I think I raised this particularly in discussion about an online sales tax. It's a hugely controversial subject. There's no one easy answer to it. But I think one thing that frustrates me a bit about this debate is it very quickly moves to the language of being punitive about online retailing. That's certainly not my perspective as somebody who represents the vast majority of them are pure bricks and mortar retailers, a few more of them doing delivery at the moment, but it's really a bricks and mortar sector. Nothing wrong with online retailing. Online retailing is a great success story where we're particularly strong in the UK. We should be trying to support that, but we should be trying to tax that fairly in respect of other models. That to me is the objective from the system. And finally, I know a point here to the Taxpayers Alliance Heart is simplicity. And to illustrate just how complex the system has become, we have a huge industry in business rates appeals. And this is, and the number of people I've met and all trying to construct a contribution I know, but whose job is to help our members and other retailers and other businesses with business rates appeals. It cannot be right. It cannot be efficient. The system to be so complex that so many business rates appeals are just automatically appealed. How have we got to this point? Well, how have we got to that point? Let's make sure that's not a feature of the system we create into the future. So those are some initial thoughts. Very much looking forward to discussing this further.
Thank you very much. And stepping up to the plate now is Nick Lakin. Nick is from Kingfisher, which is an international home improvement company that operates such brands that we may be familiar with as B&Q and Screwfix. Nick, over to you.
Great, thanks, Henry. And yeah, thank you, Conservative Home, and thanks, Taxpayers Alliance, for the invitation. I'll also just say as well, Paul, just thank you so much for your support for the retail sector over the last year. You genuinely have really fought for us at various times when people have really needed it, and it's been appreciated, so thank you. However, I am here to talk about business rates. So give you a quick kind of introduction perspective, first of all, and then some thoughts on recommendations. So, we own B&Q and Screwfix in this country. They are two very, very different businesses. So we've had the luxury of kind of seeing both sides of the debate on this. B&Q, it's been around for 50 years. It's big box stores. We've got 300 of them all over the country. And then Screwfix, you've got one of the fastest growing UK success stories of the last decade. It's lots of small format stores. We started off with 0 and we were purely online. We're now at 800. So we're targeting 800. So, this is going really, really well. But we've seen both sides of how the online world has evolved. And because we're an international business, actually our CEO comes from China. So he's seen the transformation of how China, which is frankly leading the world in kind of online innovation, and what's gone on there. What I would say that COVID and the digital revolution that's taken place, we've seen that COVID has basically accelerated all of those fundamental trends that were already happening. And we talk about it putting at least a further 2 years on our plans. So life was already changing, already going fast. COVID has driven it so much faster. Let me just kind of build on some of James's points about the retail sector overall, though. Let's be clear, it's the largest private sector employer in the UK. Over the last year, we've seen tens of thousands of job losses and many retail closures. And already this year, their estimates are around 15,000 jobs have been lost. And that's a fundamental point to think of about COVID. COVID is an accelerant in this. So it's accelerating change faster than ever before, which is why fundamentally action needs to be taken as soon as possible, because that is a door that is closing. And in the case of business rates, this is a debate that's been going on for over a decade now. And I get that it is really important that we can find the funding and the money for the services. However, we've got to find a way to make the system work properly. And just with a bit of research about this as well, because one of the big impacts of this is its impact on an agenda dear to the government's heart around levelling up. And those research that was published last year shows that shops have a disproportionately significant role in providing investment and employment opportunities. And in areas where retail is an anchor, so it delivers above average employment and investment. So for example, Blackpool South has, for example, retail supports 1 in every 6 jobs. And in fact, 80% of constituencies with the highest rates burden, so that's rates as a proportion of the profitability, are in the North and the Midlands. So that's places like Bishop Auckland in the northeast, where shops can face a rates burden 8 times that of similar stores in the southeast. So very simply, business rates are now penalising shops in constituencies that the Conservative Party is keen to level up. We can all agree then there's a problem there. And we know that it's no longer fit for purpose, and it's been discussed for a long time. And fundamentally now, the UK is a digital economy. And so fundamental reform of it plays a key part in that post-pandemic recovery. So we'll talk about kind of three kind of principles. Paul mentioned it. I think a level playing field between physical and online businesses that ensures fair competition is something that has to be addressed. You've got to maintain revenue for local councils and services. And in the course of talking about how business rates needs to be reformed, I am very sensitive to, and we are very sensitive to, that this is something that funds a lot of parts of society that we all want and are important. And then a specific point around avoiding the jeopardy of double taxation for multi-channel businesses. So if you've got a store and you're running click and collect, which is quite a common thing that large and small retailers are doing, clearly, if you end up then doing an online sales tax on top of that, then you're adding difficulty and pain already on a system. That said, we think there are two areas that require the most urgent reform and are the two kind of quick wins to make. The first is reduce the business rates multiplier. Back in 1990, it was at 35%, and since then it's risen to over 50% today. And the reason, if you go back to business rates, is a good idea. It's a property taxation. You can kind of see the logic of that if you're going to go down that path. But it was set at a certain level that was sensible, and then over time it's just been bent out of whack. We personally think that taking it back to that original rate of 35% would be a lot more reflective of the structure. So if you're going to stick with business rates and not do anything more radical, take it back to where it was originally designed. And then the second point is this leveling the playing field on taxation. So, currently online retailers do pay a lower proportion of rates per sale than bricks and mortar retailers. In the case of Amazon, the public research is estimating it's around £70 million a year. My own business pays around 140. As a percentage, that's about 1% of Amazon sales compared to, say, 2.5% of Next sales or 1.8% of Marks and Spencer's. So there's a big, successful, established retailers, and they're not able to compete against that kind of dynamic. And other forms of taxation are not paying its way either. So I'd just close by saying, reducing business rates for retailers, rebalancing the tax system to ensure you have both online retailers paying a fair share, but also giving that vital boost to bricks and mortar retailers across the whole country, and supporting those communities most in need of levelling up is a great place to start in doing this. And that will benefit the UK economy and that future of retail that we all want to get into and talk about. Thanks.
Wonderful. Thank you, Nick. And wrapping up the panel before we move on to your questions is John O'Connell from our kind sponsors, the Taxpayers Alliance. John.
Thank you, Henry, and thank you to Conservative Home for having us this afternoon. For those of you who don't know, the Taxpayers Alliance is a campaign group that campaigns to reform taxes, cut waste, and speak up for British taxpayers. We've been around since about 2004, so it's probably unsurprising we've spent a large part of that history talking about business rates and campaigning on business rates. And indeed, given our campaign isn't just Westminster based, it's nationwide. We take to the high streets and town squares across the country. Business rates has always been a hot issue for people who support the TPA and who want to get more involved in what we do. And I remember some earlier action days that I was on in Bath and in Grantham, Southend, and one in Cottingham in East Yorkshire in particular, where we were looking at business rates specifically. And we were speaking to a couple of businesses up there, and there was a woman called Jennifer who ran a florist, Judy who ran a cake shop both in Cottingham and she had a branch in Hull as well. And we were speaking to the landlord of the King William IV pub up in Cottingham too. And the reason that's important, the reason I mentioned those people specifically, is to try to bring to life a really important concept when we're talking about business taxation. And that is that businesses don't pay taxes, people pay taxes. So when we're talking about taxes on businesses, we're actually talking about taxes on people. And that normally happens in three ways, possibly more, but these are the three key ways. One is higher prices in the shops. Second is lower wages for workers. And for both of those issues, coming out of the pandemic, the coiled spring, if we want it to bounce back fully, higher prices and lower wages won't be a helpful way to do it. Third is lower returns to shareholders. And you could sort of say tiny violins for the shareholders, but that has a negative impact on investment in the way that James alluded to so powerfully. in his comments. So people pay these taxes rather than a bundle of contracts called a business. Your TV doesn't pay the TV license, and your toaster doesn't pay for the taxes on green energy either. So I think that's sometimes why it can be sort of slightly easier, perhaps, for governments to increase taxes on businesses, because the prevailing opinion among the public is, as long as they're not putting up my personal tax, then surely, you know, some firm over there that's sort of nebulous can pay the taxes. But it ends up being people that pay taxes. And of course, as has been alluded to already, the multiplier on business rates is now at 51.2%. Whereas only a decade ago it was at 41.7, and as Nick was saying, it was even lower still at 30 odd pence in 1990. So when the consultation was launched that Paul was talking about, of course the Taxpayers Alliance made a submission to that, and key in our submission was to rule out rises in the business rates multiplier. In fact, we want to see a cut, and a permanent cut, to business rates. We also think that it would be helpful to businesses if the revaluation for non-domestic rates happened every 3 years instead of every 5 years, so that market conditions are reflected much more accurately in present day business rates that are actually paid. And the final recommendation we made was to allow for a decline of rental values of more than 10% to be incorporated as a material change. So if you are appealing your business rates, you can do so on the basis that there's been a decline in your rental values of 10%. So those three ideas should help to ease the burden on businesses were they to be implemented. As Nick mentioned, it's important that we raise revenue for public services. So, you know, we talk about where do we get the revenue from? Business rates did bring in 25 billion roughly in 2019-20, which is, I suppose, the last normal non-COVID year. So that's a rough guide to how much money it brings in, which is a lot. It makes it the 6th biggest revenue raiser for government. And then the question becomes, where do you get the revenue from for services? But you're probably not surprised to hear from the Taxpayers Alliance that I think that's slightly the wrong question. I think there's a dangerous consensus in Westminster at the minute that higher spending in and of itself is virtuous. And if you watch a lot of the main political programs on TV, you quite often hear a lot of pleas for more taxpayers' money. They're quite often met sympathetically by presenters, and there's not much challenge on the premise of that question. Why aren't the debates about, you know, helping out the private sector? There seems to be this position in Westminster that the private sector is evil and the public sector is good. I think, you know, with more than 3/4 of workers working in the private sector, we need more private sector champions. It shouldn't be so lopsided. So when I talk about cutting business rates now and to cut them permanently, I do so as part of what I think should be a pro-growth agenda. So thinking about the dynamic impacts of more investment, again, something that James alluded to earlier, you know, new hires paying income tax, and then more VAT on their, you know, increased disposable income with higher wages. Over time, that will offset the one-off lost revenue that the Treasury will say would happen with a cut in business rates. But I suppose even the term lost revenue is slightly challenging, in that it implies to me that the money seems to belong to the Treasury in the first place. And it means that, you know, they're just happy to give some of it back to businesses and taxpayers from time to time. And that's obviously not the case. A cut in business rates simply means that they're taking less from taxpayers to start with. So it was really, really interesting and encouraging to hear Paul talking about tax simplification. I think that's a really crucial point. And it was alluded to by other speakers as well. The system is so hideously complex that it's very hard for the government to extract revenue in a simple way. So there's quite a lot of changes, and a simpler tax system, something that we've argued for about a decade now, along the lines of a single income tax. I think that would help to solve a lot of these problems and make sure that when we can cut business rates, we can do so as part of a pro-growth agenda.
Excellent. Right, now we're moving on to the Q&A. We have got plenty of questions from the audience, but I'm going to do what I often do and seize the chair's prerogative just to come back Nick on something quickly, which is you pointed out in your opening remarks that the burden of business rates falls much more heavily on businesses in the North and the Midlands. For those of us who are less familiar with the system, could you possibly just elaborate as to why that is? What's causing that dynamic?
Well, let me start, and then guys, feel free, and maybe James especially, join in. One of the major issues is transitional rates relief, and this is another part of the challenge with the business rate system, is that there's not just a simple system there, but it's been messed about with quite a bit over the years. And each time it's been messed about with, there's been an element of good intent in it, but you end up with something that's very bent out of shape. And part of transitional rates relief was a principle about trying to balance out the impact of how, when revaluations last took place between, say, London and lower rental value areas of the country, they're trying to manage a slower impact of the change there to make it less heavily impactful for the southeast, I guess, especially. But then because of that, that means you've got kind of a heavy imbalance, and imbalance that's being addressed very slowly as well, which then makes a burden greater on properties in lower value areas of the country, particularly the north. So that's one big issue I'm especially aware of on it. I'm trying to think if there are other factors as well. James, you may know.
Yeah, I think that the downward transitional release, essentially those businesses that have seen their values, or those premises have seen their values decline, there's a lag in terms of getting to their new true value because of the downward transitional arrangement. So that's one of the things in particular. And sadly, those are some of the areas that have had the most significant challenges of late. So essentially, the businesses in the West End and Knightsbridge have got very, very high business rates. Over the last year, they've been suffering, but generally over time, they've been seeing significant increases in their trade, which kind of justify the increased property values. They clearly are very, very high business rates places. But in other parts of the country that may once have been thriving as towns, but maybe sadly, particularly the sort of secondary towns outside of London that maybe aren't anymore, those business rate values remain stubbornly high and take a long time to come down with transitional relief. So I think that's the main reason why it's proportionate.
Okay, excellent. Now, with these questions, if I think they're particularly suited to one member of the panel, I'll direct it there first, but mostly I think these questions are going to be to all of you. If any of you want to come in, just raise your hand so I can come. So the first question is from Vaskor Basak. I hope I've done justice to your name. Is there some scope to rebalance the tax burden between current relatively low corporation tax and high business rates? Does any of the panel want to come in on the corporation tax question? Nick?
I would say yes, and I think, yes, that's already happening. I mean, you just saw in the most recent budget, corporation tax moves it up. I think the challenge is that whilst the corporation tax increase, which they've just made, is a pretty punchy increase as well. I think it's 25% it went up to from 19. So that's pretty robust. If you look at where that puts the UK on the international kind of corporate tax thing, and that's always kind of one of the benchmarks you have, that's an okay increase. And I think a lot of businesses were quite comfortable with that, because we said, well, fundamentally, it's a taxation on profit. And so if you're making profit, well, then, being taxed on that, in the grand scheme of things, you're taxed on. Whereas business rates, you're being taxed on something before you're making money as a business, delivers a whole load of other additional challenges to it. So, yes, that's one of the solutions. But back to, I think, what John and Paul both mentioned, is that business rates fundamentally is a big revenue raiser. And so there's a limit to how much corporation tax alone isn't going to solve your problem there.
Yeah, if I can come in, Henry, I totally agree with that, and it is getting that balance right between, as we say, just square footage and actual profits, because it's about measuring outputs and outcomes, really, isn't it? And so corporation tax, as Nick says, is based on profit. It's based on actually achieving something rather than just buying a bigger building or building a bigger building. I'm sitting here, I think about 200 yards behind me is Nick's Sutton B&Q store, which I think is if I remember, correct me if I'm wrong, it's the biggest in-town DIY store in the country or something like that. It's a huge footprint in town, and about 100 yards in front of me are two convenience stores, which are probably members of James's organisation. And you would sit there and look at how out of kilter the news agents around the corners are spending money on, and the convenience stores are spending money on, because of their high street footage. Now that will increase footprint for them, but nonetheless, better to look at their profits and their the actual achievements, I would think, in recalibrating tax.
So the question itself, actually, and Nick and Paul's answers sort of kind of points out what a terrible tax business rates are, because they're a tax to do business. You know, it's like paying for the right, paying the government for the rights to do business, is set up to do that. And whereas high corporation tax, you know, ultimately there's a tax on your success. I think one of the reasons why, and I can't speak for Paul and the government, but I think one of the reasons why successive governments are nervous about shifting that is just the collectability of business rates. You know, the premise is there. It's pretty hard to avoid business rates. Some businesses are quite adept at avoiding corporation tax, and I think that's one of the fundamental challenges as well.
And I think one of the things, Henry, is the idea, we talked about the UK being the best place to start, grow and scale a business. And I want to make sure that it doesn't matter where, I want to go further. It doesn't matter where you are in the UK, it should still be the best place to start, grow and scale a business. That means that sort of equality that we were talking about rather than regional issues. This is, you know, you can talk about levelling up, but it's just basically about an equity in all of the different regions. I should have said, by the way, I think I quoted 27 billion quid in terms of business rates support. 10 billion, 27 billion was VAT. So I don't want to get my facts wrong there.
It's all right, no problem. Well, I think we've actually answered a question which I was going to read out from Brian, which was asking, you know, he says a colleague of his runs a 4-star country hotel, pays business rates based on the size of the building. Should it not be based on the comment? So actually, there seems to be some consensus on the panel about that. So we're going to go now. This is an interesting one from Dominic Curran. It's slightly involved, so please let me. So he says the original sin of the business rate system is the requirement for fiscal neutrality, which arises from a unique historical quirk when the system was originally designed. If the fundamental review does nothing else, what logic is there for retaining it when no other tax ever demands the same sums be raised year after year, regardless of economic circumstances? So I think this might be one for you, Paul.
I think it's a good point, because I think it just comes back to James's fundamental point, which cuts through all of that. Is essentially it's a tax of entry into business, and so you know, so if you've just got an equal bar for a number of businesses, no matter what they're producing, no matter what the profit is, no matter what social value they have for a particular area, is that the right way to be approaching a tax system? And I would suggest probably not.
Okay,
I would just add, can I just add to that? I was going to say that the other problem with these discussions is that when we talk with, say, Treasury civil servants, because of the scale of the money that's involved, their obsession is we'd like to reform rates, but we still need to keep the same revenue coming in. And it's not even a conceptual discussion about maybe a whole business view of taxation or a whole business tax view, as opposed to just business rates and how do we kind of maintain that. And fundamentally, I think that is back to the point about it's accelerated change so much. You're trying to hold on to something as all the foundations around you have shifted and changed. And that's just not long-term sustainable anyway.
Yeah, I think actually, sorry, Henry.
Oh, no, I was going to say, I think both of you had raised your hands, but if you want to go to James and then we'll go to John.
Sorry, you go, John. I've said a few things already.
I was just, thank you. I was just going to make a very quick point about tax reform having to be to be revenue neutral. I think that causes far more problems than if we were open-minded to the fact that the tax burden is already too high. When we look at tax reform, we should be thinking it's the tax burden's at its highest for 70 years. Why can't we bring it down some? You know, and that actually opens a lot of doors when you're talking about reform. When we did our work on the 2020 Tax Commission with the final recommendations of the single income tax, we very much were hamstrung by the idea of being revenue neutral. It didn't allow you to come from first principles of taxation, which is to remove the debt equity bias, for it to be neutral, so it didn't impact on different decisions. So I think going back to first principles of taxation is very, very difficult if you are rigidly revenue neutral in your proposals.
And I think it's not revenue neutral anyway. So those shops which are shutting down or apart, what are they doing? Look, converting into housing. So there's loads of tax comes in against that housing. There's the VAT and all the building work that's carried out. There's stamp duty. There's the council tax that's paid by the people who are living in those houses. So I think to me, I agree, the principle of being revenue neutral is the wrong principle, but it's not actually being properly applied. If you took into account all the additional revenue that was coming in when those businesses convert into something else, so particularly housing, then we're it's not. We're strongly in the black in terms of what that property is now being used for.
I know,
Okay,
Henry, when I was a local councillor, we used to look at the push the Liberal Democrats in Sutton to have zero-based accounting on their annual budget to keep refreshing what they were doing. Now, clearly, that's tough to do on a national context, just because of the sheer complexity of it. But that kind of approach, the kind of just continuing looking to see what you can do to refresh, rather than just have the status quo of what's been just because that's the way it's always done. Is a good thing to do, and I think that's why I hope this fundamental business rates review is as fundamental a review as it uses on the tin.
Just a quick question for me. Just a quick reminder, first of all, if you've got a question and you're joining us on Zoom, the Q&A box is at the bottom of the screen, so please just go in and type your questions, because we are going through them. Just a quick question for me. Again, I think I'll direct this to Paul first of all, but if in the event of a change to this system, would there be a potential there for or a danger, depending on your point of view, if you ended up having to fund more local, essential public services, or however you want to phrase them, with Treasury money, of undermining local autonomy? Because I think some of the you ended up having to top it up with Treasury finances instead, in order to bring business rates down. Because one thing that I think the panel has mentioned time and again is that this revenue is, with the exception of John, there's a general political consensus that this revenue is quite important, and therefore there are limits, if you want to maintain that revenue level, to how much you can change it. But if you make a bigger change that actually reduces the amount of revenue that comes in through business rates, it seems to me that the obvious answer to that, if you do want to maintain spending, is more Treasury money. But that obviously then has potentially political. Is that something that you've been thought about or been concerned about?
It's something obviously of concern that we need to look at, because the way that business rates are redistributed are it's a quite a centralised system in itself. I'm also the Minister for London, and so as I think James alluded to earlier, there's some of those the city centre concerns about businesses within say somewhere like Westminster. You've got a small business there that has a huge amount of business rates, and what happens to that business rates is distributed around the country. But I think that's a fundamental issue and discussion that we need to have about devolution and financial devolution as well. I'm a big fan of making sure that decisions and funds are taken and raised at the local area to the people that are most affected. But we've got to make sure that the system's in the place, the capability is in place, the people are in place to be able to make those decisions and deliver on that as well.
Okay, brilliant. So the next question is from Paulina Lewis, and she asks quite a simple one. What happens in other countries? Can any of the panel think about good examples of good practice of business taxation from other countries that we could apply in the UK? Silence.
See, we all fell into that one, didn't we? We work in different markets as well, and I think the important point to note about the UK business rates tax is the UK has, I think, it's the highest property tax in the world, or one of the highest business property taxes in the world. So, in terms of how do other countries approach it, the long and the short of the answer is not like this. Which has got to throw up some kind of questions for you anyway. France has a different type of property tax. They certainly don't. It's called the TASCOM. They try not to punish investment in property. So that's already a kind of different concept there. I mean, France, I would, not fall over myself saying it's a great model for corporate taxation systems, but there is, from a property-based tax approach, there's more kind of sensible measures there than where the business rate system of the UK has got to.
Okay, no one else. Okay, so the next question comes from Peter Flake. Now, we've talked about moving business taxation in one direction, which is away from property and towards the actual operation of the business. Peter asks, instead, can business rates be replaced by a land value tax on business premises? Does anyone in the panel have thoughts on that one?
Yeah, it's a really, really interesting question, and there's a logic to it, because if business rates is a property tax, and if we don't want to penalise the way that we improve and develop property, and we want to try and encourage businesses to do that, then there's a certain purity to saying, let's value the land and pay tax on the basis of that. But then what you do with that land, I mean, there'll be planning laws and everything else, but in terms of the tax system, is your risk, your reward. You're not going to be charged more on that. And I think it's quite a seductive idea. Now, that's not used in many places. And in this last consultation, the government did look at a sort of values tax of this basis and put it up for discussion. And it has got a lot of love from many people. I think it's used in California and one or two other places. I think California might be moving past it now anyway. So it doesn't seem to work particularly well anywhere, but I think it is a pretty good starting point. I'm not advocating for it, but a starting point to say, if let's look at the value of that opportunity and we'll tax that to whatever level is appropriate. Then what you do with that, that's your risk, your reward. And so the improvements you make, the way that land is developed, that's all either reflected in rent, which reflects in your investment in that property. So I think it is actually a good principle to work from, is to say, let's think about valuing that land at its most raw level.
John, did you want to come in on that?
Yeah, yes, please, Henry. There's lots of arguments for a land value tax, but I think some of the things that other panelists have been talking about, with business rates itself, which is that it's a dry tax charge in that you have to pay it whether or not you've got the cash, and land value tax is no different in that regard. It is a dry tax charge, just like council tax, where you could be sort of essentially not have the cash to pay for it. So I in that sort of very straightforward regard, it doesn't solve the problem for me. It's still a dry tax charge that is charged whether or not the business is doing well. So it doesn't solve some of the problems that the panelists were alluding to earlier.
Okay, and just quickly, I'm gonna Paul, any thoughts on land value taxation? No. Okay, so the next question. Now, this is clearly a question from somebody who knows what they're talking about. So I'm just going to read it out and hope that the abbreviations make more sense to the panel than to me. Right. So David Bullimore says, simplify the rates appeal system. Presently, appeals can take 2 or 3 years for ratepayers to amend their RVs to reflect their rents at the AVD. Should there be 2 years gap between the AVD and the start of the list? Now, does this question as constituted, does anyone know exactly what he's talking about? Because it sounds like a good question, but I'm not entirely sure what the abbreviations refer to.
Yeah, I've got most of that.
Okay.
Sorry, there was a girl to come in. I was quite happy for someone else to answer that, but I think I've been the first to break and to unmute.
Yes, you have. I'm afraid you have.
Yeah, I mean, the fundamental is there are too few valuations. If there were more frequent valuations, you would have fewer appeals for each valuation. Those appeals get backlogged for ages, so you still have people appealing their previous valuation when they've had their new one. There's a wrinkle in the system that, because of some very good policies from this government in terms of providing full rate relief for some of the smaller premises and smaller businesses, we spend a lot of money rating properties on which there are no business rates coming in. So that would be another way of simplifying and taking. So too many valuations are either made against businesses against which there's no value coming in, or are highly controversial and are constantly being appealed. If we could take away the resource from the former and put all that effort into trying to get valuations right first time, but also into dealing with those more complex valuations and complex appeals, I think we'd have a much slicker and more efficient system. Because the degree to which it is out of date is, I mean, it's just totally unfeasible. It's amazing that we accept this as a state of affairs, that people are so far in arrears in terms of arriving at a correct valuation.
There we go. No justification to your hesitancy at all. I think you explained that very clearly. Paul, something that's come up several times on the panel so far is that the revaluations are too infrequent. That's causing problems. Is this is part of the review to change? Going to address that?
Well, one of the things we did this year around was we postponed the review, but we also said that we would base it on property values of April 2021, so that we could actually reflect changes to the market following COVID. But I think this is another thing that I was Googling as you were talking about this, what AVD was, antecedent valuation date. I think that just explains speaks to the complexity of the system. And James, I'm glad James tackled the meat of the question. He's all over the detail, but there's no doubt about it. The tribunal system and the revaluation system is incredibly complex, and hence the delays within the system. So, yeah.
Lovely, thank you. Okay, so this next question comes from Max with a capital X. Thoughts on grants tax offsets for distributing offices, allowing for more support for work from home or work near home? Is this something that Paul, do you want to come in on this?
Yeah, absolutely. I mean, look, we've because this is going to be huge. This is what I was talking about going with the grain, and we've got to find out what that with the grain is, frankly, in terms of scale over the coming weeks. If you believe the boss of Goldman Sachs, it's an aberration. Everyone's going to go back to the workplace. If you believe BP, they're going back to 2 days a week in the office. Nationwide have just said you can work from wherever you are, and there's going to be a mixture of all of those sort of things. A number of shared workplace offering businesses are looking at sort of having clusters around the outskirts of towns to maybe have teams working in there and then going into the HQ on maybe 1 or 2 days a week. And I've been having my big drive is the employment bill, which we've got coming up when parliamentary time allows, and we said in our manifesto that we consult on making flexible work the default option. I thought it was going to be really difficult to persuade businesses to go down that line, but clearly here we are, all living on Team and Zoom, or as I'd call it, the Truman Show version of life, because someone tends to curate the kind of people who are on a business meeting held by these kind of things. So you never get those sort of informal brush by meetings that you do, as I think the Chancellor was talking about in his, I think it was a Telegraph interview this morning. So there's lots of things that we need to do to make sure that permanently working from home is basically living at work. So that's not really flexible working. But once we've got worked out where the grain is, where that baked in behaviour changes are, then we can sort of reflect that in a better tax system, in a better approach to town centres, city centres, and making sure that we are getting that working. But that's part of the reason why this fundamental review was pushed back to the autumn, to start to learn the lessons from COVID.
Okay, so the next question, I suspect that this will sort of cut across the emphasis on simplicity that we've had in some of the panel. But Chris Lucy asks, could we not abolish business rates on certain types of retail and offset that effectively by increasing it on large warehouses, such as those used by Amazon and other companies of that sort? Does anyone on the panel have a view on introducing that kind of exceptions? John, I think you just unmuted. So.
I did, possibly by accident, but I'll go for it anyway. Simplification is always preferable. I think that applies across the board. If you were being a tax purist about it on VAT, for instance, you would have a broad base and lower rates. But there's some exemptions that are too difficult to get rid of now. And the same applies here. I think adding complications to the system indicates that politicians are picking which type of businesses are, good or virtuous or wanted. And I don't think that it should be politician-led, it should be consumer-led. So I think adding those kinks to the tax system will only complicate matters further.
Paul, I see you nodding along there.
Yeah, the sentiment that John has about politicians liking using the tax system for those reasons is absolutely one I share. We always talk about tax simplification, and we created the Office of Tax Simplification. But the problem is actually when you get your levers on the tax system and the levers of power, it's very easy to move from nudges through to more enforced pushes using the tax system. For political purposes, and as I totally agree with John that actually it should be consumer-led.
Okay, so the next question is from Brian again. He says the solution to amending business rates must rest on ability to pay. He says that actually corporation tax is a ready-made system. Is there not a case effectively for, instead of having this two taxes on businesses, effectively rolling them all into corporation tax and then having it operate that way?
I'll quickly jump in, Henry. I think that even corporation tax is outdated. It's based on sort of 1960s, 1970s model of, blue collar workers over there, white collar workers over there, clock in, clock out, and we know what all your profits are. The global economy's obviously changed markedly. And I think that's a broader problem when you zoom out with taxes in general, is that they're constantly trying to catch up with the world that's changing around them. and it makes it an extremely difficult job. I'm actually very sympathetic to politicians and lawmakers in that regard, because it makes it so difficult. And again, I would say this, but the answer to me is to simplify taxes, keep them as simple as possible, as neutral as possible, such that you can continue to raise money for public services, which is the objective of the tax system, in the most efficient way possible. And we did recommend a series of proposals on this, where we shift to taxing distributions of income. So distributions of income are taxed once and once only. If the money's kept within a company, then it's used for reinvestment and therefore not taxed. And loads of proposals on our website for that. But simplification is the key for that. And I fear that lumping it all into corporation tax would lead to sort of different problems with a much more globalized economy.
Yeah, just to build on John's point there as well. I mean, you've got part of the complexity as well is that particularly digital tech firms, part of their incentive of creation isn't about profit making. It's about growing scale, and it's about data. So, Amazon wasn't profitable for many years, and indeed its retail business isn't the bulk that makes the bulk of its profits now anyway. So that's one challenge. And then I think you mentioned about the kind of corporation tax also plays in this kind of global market of corporation tax. And you have the OECD BEPS conversation about taxation and trying to globally revise taxation sources, which has been gummed up, as these things naturally are, between the US and Europe over several years. It's possible this might play out this summer, when I think it's the G7 and G20 get together, and that might then add some more clarity for the British government. But I think you're back to the same principle, though. Simplification of what we have in control in the UK would be a fundamental piece that would address things across our own nation.
Okay, would James or Paul like to come in on that? I think it'll probably be the last question, given where we are.
In terms of the way the incentives would line up, yes, corporation tax beats business rates for us, because it's a tax on your outcomes rather than a tax on setting up and operating in business. The biggest question practically is just incentive avoidance, and Nick's outlined there as well the challenges that those businesses are not all about profit seeking in the way that our members would be in terms of their business model. So I think it's problematic for that reason, but as a principle, wouldn't necessarily disagree.
Absolutely. I think I think we're all agreeing on this idea of simplifying, making sure that businesses, whether they are Nick's size, whether they are the size of James's members, frankly, you shouldn't be spending all of your time, or significant amount of your time, worrying about which tax regime you're working in, which taxes you're trying to push across and avoid at the expense of something else. You should be working on your business, how to drive profit, how to drive footfall, how to drive social value from your businesses as well, all of these sort of things. And we can concentrate on that, then you make more profit, you'll raise more taxes, we'll pay for more things through public finances, and then we can start to distribute that income. But that should be their focus.
Lovely. I think that brings us exactly to the end of our time. Thank you so much to our panel and to everyone who's joined us at home. I don't think we have a suite of cheesy sound effects at Conservative Home, but I'm sure that I speak for the entire audience when I offer you a round of applause. Join us. I think this is the last event for today, but please tune in to join us tomorrow at 9:30 when my colleague Mark Wallace will be chairing an event in partnership with the British Red Cross, looking at how we build a fair asylum system. From me and everyone at Conservative Home and from our panel, thank you. Have a lovely afternoon.